right, guys, welcome back to Real Estate and Finance Podcast with Milton Andrade and Kimber White. So today we're going to have a conversation about really everything that's going on in the market today. Let me blur my background so we're not seeing anybody. And so, Kimber, thanks again for always joining us and being on top of all the latest data, the latest trends. We have a couple different things I want to talk about today. First off, how you're doing? You're looking sharp.
Good, doing good. Business picking up.
Yeah,
Uh, Things are starting to get busier. We've weathered the storm, as we've called it, but really in Florida, we've never really had anyone, so I'm doing well.
kind of like COVID. Didn't really happen
Yeah,
here.
didn't really happen here. Exactly.
Yeah. Well, definitely, I definitely feel the market picking up. Every contract or every listing that I've had is more or less in contract. I had one which was in and out of contract like 7 different times because we were in that month of June. I think it
Yeah,
was June, where like 15 or 16% of every contract went out of contract for one reason or the other. Interest rates or just, people not feeling comfortable with the price and such. But that has long been over,
yeah.
and it's only been a month. You know, it's crazy how fast things are moving, but when inventory levels, regardless of the headlines stating that inventory is at such a high level, it is not.
No,
Miami, South Florida in general, is not at pre-pandemic levels.
no.
And it's that's just the truth of it. And we don't have anywhere to build new homes, right? We're kind of restricted on land. We can build a few, we can't build hundreds. So what you see is what you get. And this is one of the hottest markets in the entire country. I would say with the population growth, and with the companies that are moving down here. And there's some serious companies moving down here to South Florida. Here where I am in Brickell, there is an office building called 830 Brickell. It's a brand new Class A 5-star office building. It is pre-leased at 100%
Wow,
at Manhattan prices.
wow.
And you have Microsoft, Apple, Citadel is going to be there. Citadel, one of the largest hedge funds in the United States, that
Yeah,
relocated from Chicago, and the hits just keep on coming. We have FIFA here for the World Cup.
right.
We had people for CONMEBOL for the America's Cup, which just passed, and this is just a tip of the iceberg. So I'd say bet on long Miami. This trend isn't going to change. So how can we help people today?
Well, I think, add to that, you've got Miami, then we have South Florida, we have Fort Lauderdale.
Yeah.
I sit on the in one of the economic development advisory boards, and the development's getting blowing up in Fort Lauderdale. It's becoming a mini Miami. So
It
all of
is.
South Florida is blowing up, and it's not going to get any uh, slowdown anytime soon. Uh,
Right. Right. Yeah. And there's a condo boom going on over there, and
yeah,
this is the last affordable like bastion of
yeah,
in South Florida. Fort Lauderdale was very affordable. Matter of fact, when I have people looking for properties down here and their budget's tight, I go, listen, your dollar goes so much further in
it
Broward
does.
County. Let's take a look at Fort Lauderdale. Let's go to Pembroke Pines, right? But now the average starter home is at about a $500,000, right? You
Yeah,
you can't
that
really
yeah,
find
half million.
too much of that now.
Yeah,
Yeah.
I, and speaking of what's happening from 30 days ago till now, we hit interest. If we remember in May, we had interest rates going to go. Oh, they were in the sixes, and we're like, yeah, we're chugging, we're going to go. And then we hit a blip. The economy, the market, the political spectrum that was not real happy.
An election year.
And yeah, and bam, we're back up in the sevens again.
Yeah.
And we're like, oh, the Fed's not going to be doing any cuts. That the economy's got inflation. It's still hot. People are still spending. Um, and we really thought, as I told you even 3 weeks ago, all right, Milton, we're stuck at this rate, maybe 7% through the end of the year. And then all of a sudden, things have taken a turn.
Yeah.
The inflation's gone down. Jobs are slowing a little bit. The economy's getting back to normal, as I call it. Instead of running, with your foot all the way to the gas pedal, it's actually backing off. And now the rates are coming down. The feds are pricing in more rates. They're going to talk this week. We expect that the market will come down, the rates will come down. We probably should. I think we'll see a quarter by September, maybe a half by the end of the year. And that's just brought people like right now from the sevens to the sixes. And like I tell everyone,
It's a
when
huge
you end up
difference.
doing that, you have more buying power.
Mm.
I've got FHA loans right now. Never thought I'd be back into it. I'm in the fives, and yeah, and I've got VA loans. So we're back
Yeah.
there. And then we have the programs that help people on top of it. And I think that's something that we need to talk
Yeah.
about
So let's
more.
talk a little bit more about those programs. I know that there was a program called Hometown Heroes where basically everybody was qualifying for, was it grant money?
No, it's not grant money. It is a zero interest loan. Hometown Heroes had $100 million in it. We're down to about 48 million in a month. So I would say that'll be gone by September and it won't be refunded till next year. But it is a Florida bond money, and there's still other bond programs that are
It's
out
going to
there.
get refunded next year?
It won't, yeah, I think this is a program that's going to, we don't know it, but we're pretty sure it's going to be funded again. I mean,
Yeah.
it's just, it's such a solid program that I think they're going to fund it. And what Hometown Heroes is, it's not a grant, but it is a 0% interest loan. So they get a minimum of $10,000 to a maximum of 35. So 5% of whatever the purchase price is. So if you have a $400,000 house, you can get 20,000 at FHA or conventional. And that is a 0% interest loan that's put on the back of the home. So you never pay it back. You take a loan out at 20, you pay a loan back at 20. You don't pay interest, you don't pay anything on it. You pay that
Yeah.
loan back at 20% at face value. And when it's sold or when it's refinanced, it's a great program because it can be used on down payment, closing cost assistance, or a combination of both.
Yeah.
It's a good way
Yeah.
to get someone in a house. Interest rates are about a 1/4% higher than what the standard rate is, but that really doesn't matter when you're getting in with that type of money. Who can buy, for $60 a month in payment versus not having $20,000?
Right.
It doesn't make sense. And then if Hometown Hero and with Hometown Heroes, it's still basically income qualifying. There's no special areas you have to live in. There's no special geographical areas. There's no special jobs or where you have to be. So that's what's great about that. And it's open. And that's the thing. It's open to everyone in Florida. The only thing is your employer has to be in Florida, has to have a
Okay.
physical office in Florida, and you have to be working and presently or moving to Florida with a job.
So no remote jobs.
You can do remote, but you can't. But it would have still have a physical office you can go to in Florida.
Got it. Got it. Got it. Okay. All right. That's, you know what? Honestly, I think that's a great program to really incentivize people to buy homes, to get into home ownership, which honestly I see a bit of an attack on right now with everything changing in the market and the dynamics, and now this lawsuit against realtors where now buyers have to sign a buyer brokerage agreement, and I guess, in one way be very clear on what this is going to cost them, but in another it's really like also a tax because the
Correct.
seller was always the one who was basically paying the commission so that you can have your own representation when you're going to look for a home. And with all this pressure against the little guy, programs like this Hometown Heroes, programs like FHA, you really got to kind of tip the scales and balance it to really help people be able to lower the threshold of home ownership to really help them get in there. Because once you're in, you're
They,
golden.
right.
Golden. Now you have
Exactly.
something. Now you have something to trade, right?
Yes.
It's when you don't have anything that you are at most risk, right? And so I definitely see the Hometown Heroes program, especially if it's getting replenished yearly. I think that would be fantastic. And besides that, there's also FHA up to 100% financing, correct?
We do have FHA 100% financing. What that offers is again Florida bond. It's 96.5% FHA. Then it's a 3.5% second. Second, now that is a payable mortgage. But again, that mortgage is 2% over what the interest rate is. Well, today in FHA and just 6.5%. So it's 8.5%, but let's just take your 3.5% of a $400,000 loan. That's $15,000. It's $100 extra more a month, 120 to get into a house with zero down.
Yeah.
Uh, and they have that program. Then you have 99% programs. Now they have those programs have geographical locations and where you live. Uh, but the FHA does not have that program. It does not have the geographical areas. You also have the Purchase Plus program, which is a Fannie Mae program that if you live in a certain geographical area and moving somewhere else, it's not where you're moving, it's where you live and doesn't have an income restriction. That gives you $5,750 toward closing cost and or down payment. And then you have on top of that, you've also got, for up to 100% financing for people who make under an area median income, which in South Florida, it's $76,000 is what you have to make and stay under. You can have 100% financing, and that's not an interest rate. That's just 100% financing. So there's a lot of programs out there that I think they're going for, and there's more. So not to get in a house today. I mean, I just had a client on the phone, and I said, look, if you're looking to buy, and I think more than ever right now from the financial side, hi, I'm going to wait. We've heard that. I'm waiting. Well, wait broke the wagon, but right now, wait's going to crush the wagon because
Yes.
it literally is. And I want to tell everyone that this is not someone who's talking as a realtor. I'm speaking of someone who's seeing what the market has done and financially. Right now, you're in that market to where the sellers are still willing to do, sellers are still going to give. But once those rates come down, all those fence sitters, the I'm waiting, are coming out.
Yep.
And when they do,
Lot more
prices of houses are
competition.
going to go up, more competition. Sellers are going to not be willing to negotiate. And those prices that you may pay, say 500 for a house, is going to be 525. People are going to be back to, I personally think by fall, they're going to be back to bidding over. I really believe that with all my heart and I think that people, the reason I say that is because people who are sitting here with a 3.5% interest rate, and I honestly believe before the end of the year that interest rates are going to be 6%. That's where we're landing, 6 to 6.8. You're more willing to jump because the average interest rate is about 3.5 right now. You're willing to jump up to a bigger house
Yeah.
for 2.5% interest rate, not 4.
Yeah.
And I just think that the market is shifting. I see it, I feel it, I see it every day. I find that.
There's a lot of pent-up demand, because a lot of people have been holding. Who's been holding? The sellers have been holding,
Yep.
right? The buyers have been holding. Everybody's been holding, and we're about to pop. We're about to pop. The election will be over.
Yep.
Doesn't matter who wins, but no longer the anxiety is no longer there, right? And the interest rates are starting to come down, and people have that ability to move, right? It's a lot of people who've been really waiting. Their kids are in bunk beds right now. They're busting
Yeah.
at the seams at that home, or their marriage may have come to an end and they wanted to get a divorce, but now where are they going to go? Where are they going to move? There's a lot of
Yeah.
that pent up demand, and I believe that once we're through this election year and as those interest rates go down, there's going to be a huge amount of competition in the market, because in our market, they're not replacing homes with new ones. We don't have swaths of land where you can build. What you see is what you get, or they're building up, right? But with our population growing to, I think, 23 million or something like
Yep.
that, it grew by that number. It's definitely going to be a place where you want to own real estate, not only for housing security, but also for wealth creation. And if you own real estate, all of this is just good news to you, because you're going to get richer. Your net worth is going to increase, because the Fed said we need to wait, we need to hold, we need to get control of inflation. But now that they've controlled the inflation in goods and services, they've got to let off the pressure to avoid
Recession.
a recession, right? It's already started affecting jobs. And so, they're doing what they said they were going to do. The medicine was not going to go down well, but now they're going to be able to get their foot off the pedal a little bit. And the floodgates are going to open again, and we'll go back to a normal market. And a market like this, and a growing and expanding market like this, that normal market will be multiple offers.
Yeah,
So
and I agree.
you got to get in. You got to get in today. You got to get in now. You got to do what you can, and really, take an active role in making home ownership happen.
And I don't go politics, but I'll say this: the I'm not sure which administration you're going to get. Some previous administrations have been very less than helpful with first-time buyers
Yeah,
and programs. Some of these programs could go away, or they can be expanded.
right.
But why wait? And I think that's the risk we're taking, and I tell everyone that is that the gap. When I hear and I hear, oh my goodness, housing prices went down. Well, the the
1%.
owner, yeah, ownership gap got bigger,
Yeah,
and as far as gap of having home ownership and the wealth inequality, it's not about so this Milton, it's not about minority or whatever. It's total over wealth inequality has gotten larger
yeah,
because of lack of home ownership. And we're
yeah,
trying to get the home ownership because the best generational wealth that someone can have, and those of you that are listening to their first time buyers, is a home. That is how
yeah,
you build wealth and home ownership and build your future. And the best that you can stuff all the money you want, your 401k and everything, but the sense of self-worth and self-pride is home ownership, and it's coming back, and the prices are
yeah,
there. And it's whatever goes up. I've been in this industry 38 years. What goes up goes down. What goes down comes back up. But what stays stable is the housing market. No matter where you have a crash, whether you don't, in the end, your equity in your home is going to be there and something for you.
yeah. And we can't build what is out there today
Yeah,
at the same cost, right? So what one thing I have to remind people of is that you are buying about 90% of the homes below replacement value,
yeah,
because land value has gone up, cost of construction materials and labor has gone up. So you can't build a $500,000 home, but that is the median price of
no,
starter homes, right? So you can't build any more starter homes,
no.
right? You can't build any more $700,000 condos. They all start at $1,200 a square foot, right? And so, you have to really consider that it is the best time to do it now and for the long term. Now, I see a lot of people tell me, well, you know what, Milton, I don't think that buying a home is necessary to be financially successful in the United States. And I go, it might be true as long as you're investing your money. But
Right,
most people don't have money to invest,
right,
and they're paying rent to somebody. You may as well build your own wealth with your home. That's really the moral of the story. Because I do have a couple of clients that they rent, and they're renting in the double digits. They're spending $10,000, $20,000 a month in rent. I understand, but their investments go into their business, and their
right,
business is the ones that are producing. So they have an asset. The asset is their business. But if you do not, right, you have to start at least with that home. Because I know a lot of people have been able to build the wealth in that home, pull that money out in an equity line or in trading their home, selling it, whatever, investing in their business, and now they have built their
right.
financial, livelihood. So beyond all that, we want to make a couple of predictions. You think rates are going to be down to about 6% towards the end of the year?
Yeah, I think 6%, just or barely over 6%. I see it now. I mean, when I look at rates right now, I'm seeing them 6.5. And if I get a quarter hit, I think they will. I think that you're going to FHAs are probably going to be around 5 to 5.25.
Where do you think the DSCRs are going to be? Because I'm thinking about how do I
Sevens,
cash flow investments?
sevens.
Be sevens. Yeah. I
I
think
think
if
that
you
percent.
get
And
that
and
down to a seven, or if you can get better than a seven, it's fantastic. But
and I'm going to say what you said there. That's a good example. DSCRs, I tell people, that's a debt service for
DSCR for
investors.
everybody is debt service coverage ratio loan. It's a non-qualifying mortgage.
Right.
It's for investors, right? This is a loan that you take based on the rental potential of the property. It is for investors. So let's leave that.
Yeah,
Now you were saying.
yeah, but I was going to say is that, but with that said, again, first time home buyers, if you're looking to buy, investors are now going to be getting back in the marketplace for these first time home buyers and buying them up. And that's what I want the first time home buyer to understand. Get in now, because within 6 months, you're going to be competing with investors again. Right now, investors are
Right.
kind of on the sidelines and going, it doesn't cash flow well. But a 1% difference in interest rate changes their mind, changes the
Big
cash
difference.
flow, and they're going to go out and buy those properties.
Yeah, big difference, big difference. And I have a lot of clients right now who are actually actively looking to purchase investments here because they moved from another state
Right.
and they're divesting from one state to invest in this state because South Florida is like the number one. Everybody wants to be here, and people would like to invest where they live. And so all those folks that moved here are also now moving their investments here. And Ken Griffin, you can look that he's been moving investments here. You have Jeff Bezos has been moving investments here. There is a billionaire New York developer who basically is divesting from New York City and moving everything to Palm Beach County, right? And so all of that is added competition. But you want to be part of the game. You want to be part of the pack
Yeah.
because as a property owner, the sky is the limit because the tax code is written for you,
Yeah, it is.
right? It's
Right.
so
Yeah.
it's not just well, because I had clients tell me, well, you know what, my rent is going to be less than my mortgage. Yeah, that could be true, but not after you factor in the tax deductions that you have and the ability to pay down that debt and the equity that you're going to be gaining. That is what you have to take into consideration. It's not just that monthly payment on the rent, because yes, you can potentially rent some of these properties for less than you can buy them for, but owning real estate over the long term is really what is going to help you build wealth, not renting. That's you're paying somebody else's mortgage. Like I have renters that pay my investment property mortgages. I don't have to worry about them. They even leave cash at the end of the years, at the end of the month. So I'm getting the debt paid down. I'm getting depreciation, tax incentives, and income.
Yep.
Right. So it's
Agreed.
like you gotta take part. You gotta take part in that. Um, so let's see. Changes in the real estate marketplace with buyer representation agreements and the buyer broker commission now being added to the buyer's expenses, but there will still be a seller contribution to help cover that. But now there are different changes now because the seller contribution, when I always think about that, I think about it as seller helping you buy and they help pay your mortgage points. They help, pay
Yep.
down your interest rate. And now they'll also be able to help pay your broker, your real estate broker, that is negotiating the deal for you. But it's also not going to be counted against you, right? Can you explain that a little bit more? Because I know we have VA, FHA, and conventional with that whole
Yeah.
seller
So
contribution.
now they're saying that they're going to add and be able that you'll be able to not to add that into addition to your down payment. So if you actually write it in the contract, so it's not going to be up to you go up to 6% or 3%. They're going to allow more than that if it says that it's to help the buyer pay the.
Yeah. So is there a cap on the commission that the buyer can pay?
I haven't seen it come out yet. I will look at
Right.
that.
So let's assume that it's probably going to be 3%. So you
Yeah.
could get, if you're putting 10% down or more, or your FHA with 3.5%, you can get 6% seller
Yes,
contribution
you can.
plus an additional 3% to pay your broker. That's 9%. And that can all be given by the seller to the buyer to facilitate the transaction.
Yeah, as long as it's shown on the HUD, you can put that
Yeah.
in there. And,
And
and and as part of the 6% seller's concessions that you can also get, now that can be part of, that can be part of your seller concession, which real estate commissions didn't used to
right, right. It's just a roundabout way of going about it because the seller at the end of the day is still paying it. Because if you want to sell your property, if you want to make it easier for a buyer to purchase your property, you want to be able to provide them representation in helping them pay that buyer agent commission. Honestly, I think this whole thing is nonsense.
be. Yep.
But that's why I see it as more of like an attack on home ownership because It's not an attack on agents. At the end of the day, agents can still do rentals, agents can still do commercial real estate. This really
Right,
only affects residential real estate. And what
right.
happened over the last 10 years? Hedge funds started buying up residential real
And
estate and
that's
they bought
exactly
up
what's
the.
going to happen.
Yes, that's exactly what's going to happen. So it's just to me, it's just crazy. So,
It's
you
nuts.
have one part that is trying to help homeowners and another that is really just trying to help institutional investors buy up more of this residential real estate. So
Yeah,
we'll
and this
see.
last,
Oh,
and I guess Mendel, go ahead. I'm sorry.
no, I would say we'll see where this lands. Hopefully, enough people instead of giving up, take more of an active role and saying, no, I need to own real estate.
Well, and I think what this does, and I'll say this out of respect to the realtors, it stops the buyers to go with five realtors. And I just had that happen to a realtor, and I'm going to say this to five realtors in the past month. I had the buyer, and they had five different realtors. You know, I
Yeah,
just thought, how unfair is that? And neither realtor knew they were dealing with it. And I was sitting there going, what am I supposed to do? And I
yeah,
just think, we all earn our money and we do it, and it gives people, it's a little more accountability. And I
yeah.
call that what it is. And I think all along that, all along, the buyer in some way has been paying this because it's always been, and tell me if wrong, it's always been
Baked
priced
into the
into the
cake.
price of the house.
Yeah,
So every to me as a mortgage person going, oh, I've been doing this 38 years. It's been done all along. And I come from states that they always had to have a buyer broker agreement, like in
mhm,
Virginia and other states. This isn't new. This is just because it's national. But really, buyers have always, and I bought homes, have always paid that in the long run
right.
because it's priced in the house when you go out and do your market analysis as a realtor and say, well, you got to give me this, you got to pay this. Well, let's price it at
Yeah,
this. So it's not like you
exactly.
got it for free to begin with.
Right. And if you didn't use a realtor, the seller just got to keep the money.
Right. So it didn't really matter.
You didn't get
And
the discount, right? You didn't get the discount. Nobody, they don't just give that discount. That's one thing that I want everybody to be 100% clear on. If you don't have a realtor, you just don't have anybody looking out for you
right.
because the seller's not going to sell it for less. If you were the seller, would you? Why? You need that equity to trade up to the next property or to
And
retire or to live on. It's money. It's your money, right? It's either you're using it to help a buyer have the representation so that you can get that deal done, you can bridge that gap, or the seller gets to just keep the money,
right.
right? Because at the end of the day, once you're an owner, you don't have to sell to anybody, right?
Right.
That's the thing. I tell people all this all the time. I go, there's a market value for a home, there's what the seller is going to need in order to sell it, and there's what you're willing to pay it. And we've got
Yes.
to marry those three things together because at the end of the day, the seller doesn't have to sell it, right? If they're asking $1 million and you offer them 500,000, there's no way you're going to force them to sell it. But if you have an agent and you go, listen, there's no way this is worth $1 million because of this, that, and the other, and based on these comps, et cetera, and so forth, and our inspection for it, and our valuability, and our appraisal, therefore the deal has to look this way in order to happen, right? And it's easier when I'm dealing with another agent that also wants to put this deal together to protect the buyer and the seller from each other,
Yeah.
really,
And I
because it
think,
is a very stressful transaction oftentimes. I try to make it as
yeah.
smooth as possible, shielding them from the personalities.
And I come from Virginia when I did loan mortgages up there before I came down here. And I never understood because remember, technically, a whether you represent the buyer or the seller, you're a transaction agent. And so everybody didn't understand the difference. But in Virginia, that buyer's agent, and Milton always worked for his buyer. I know he did, and he always has, and he always will, and most realtors did. But this now, you know what? No, I represent the buyer. That's it, 100%. I'm not a transaction agent. I don't give a crap what the seller thinks or their realtor. I'm working for you, and that's it. And vice versa on the other side. So I think that it gives the buyer, and I think buyers need to breathe because there's so much out there. It gives the buyers an edge. I come from a state that had these agreements, and to me, I felt the buyers had an edge. They didn't pay for it because usually they negotiate, but I see it
Right.
an edge. I really see as a positive for buyers. I know people look at me like you're crazy,
I
but I
think it
do.
can be a positive if you're interviewing the right agent, asking the right
Exactly.
questions, and not just signing an agreement with just anybody.
Right.
Because, and this is going to be difficult for new agents because when you've just started in the industry and you don't have any past performance reviews from
Right.
clients or really even experience, then why is anybody going to want to sign a buyer brokerage agreement with you? And I think it's really important that new agents join a reputable firm, join a
Yep.
team so that they have somebody overseeing this and helping them learn, build their pipeline, and then go out on their own and be able to get these agreements signed with directly with clients. But as a buyer, if I don't know you,
Right.
why would I sign this agreement with you? And then maybe you start with a showing agreement, see if you like each other,
Right.
see if you test each other's knowledge. What in real estate, one of the few industries where people have to get to know me, like me, trust me before they qualify me to work with.
Yes.
You
Yeah.
know,
It's
people,
my
people,
industry too. It's the mortgage thing.
yeah.
It's the same thing. How many
With
people kick
mortgages, I think it's even more
more?
important
Yes, it
because
is.
if they need to have the right pricing, they need to have the right products, they have to know how to put what box to put this in,
Yeah.
right? You have to be able to think on your feet. You have issues come up, underwriting issues. How do I save this property? How do I
Yeah.
stay on your deadlines? It is
We've been through
so
it.
important. So important. Like you can't just work with just anybody, you know? And that's why I always say, I'm like, you got to work with my guy, right? He's going to do it right. You're going to be happy. Trust me, and if you don't want to trust me, look at our reviews. Talk to
Right.
our past clients, right? This is how we keep you safe, keep your deposit safe, negotiate the right property for you, get you the best deal so that you have the lowest payment so you can afford the best house in the best neighborhood that you want. And if you go to just some random guy on the street that does mortgages, his rate is going to be potentially like a point higher than your rate because he doesn't do a lot of business with that lender because he doesn't have the right experience. He doesn't know how to package it properly. It's very important to work with the right banker.
Yeah, and the thing is, and on the chart, we will get into another conversation what points are because people asking those type of things. But going into your contract, one thing I want to point out to buyers that you're going out there, because you brought out the right professional there, and I was just asked by someone who's actually interviewing realtors up this area that's in Palm Beach, and he brought up something I brought up on Facebook, and you saw it, and on social media. They want me, but this realtor had asked, this when you're doing, they want me to give my financials and a credit report to my realtor. This is part of the new agreement. Okay, I'm going to say this, and if you are a buyer and you're asked that by a realtor, and that's part that you have to do, no, no, that your mortgage professional should be getting that. I know the contract
I
says
see
you
that as
have
a
to do that.
liability. I don't want anybody's personal information.
Yeah,
I want to
but
know that you spoke to them,
right,
you qualified them. I have that approval letter. We're good to go.
right, and I think that's why I want people to know what's coming out of this because this got brought up. I saw it and I read it when someone brought it up to me that was in the industry. Never, ever, 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 ever do you ever give your financials to a real estate person or someone other than a mortgage professional or a bank. I'm sorry, that's just a no.
Right.
Because as Milton said, I'm the finance person, they're the real estate person, and I would always tell them with this new agreement that's coming up, just like Milton, I will be glad to give it to a mortgage person, but make sure it's someone you've interviewed and you know is professional. I
Right.
have to bring that up because that's a big thing
No,
for me right now.
100%. And one thing I'd like to mention is honestly, I know that it's not illegal for realtors to do mortgages, and I know some realtors that have multiple licenses, but don't do your real
Yeah,
estate mortgage and like don't do your inspection. Don't cross over all these
yeah.
things. They should be separate professionals that are non-biased and working for you and not trying to make their entire month on that one deal. That's
And
that's the that's the biggest difference.
I'm going to go into that real quick and we'll finish up with Milton on that. You cannot be a dual agent. I'm going to probably get smacked by other people and say this and tell me you're still representing the best interest of that buyer by doing both sides of the deal. Number one, you may be, but you can't wear two hats at the same time. And I think both of them need to be independent. I've always said that. And Milton's right. Milton does his job and does it well. I do my job and do it well. get a qualified mortgage. And by the way, if that deal goes south and you have to get a deposit back or you have to have an issue, who do you blame if the deal goes south? The realtor is also the mortgage person. How do you know who? It's just not good business. Don't mix the two.
It's not ideal. It's not ideal. Yeah. I don't do it.
No,
You know, I don't do it. I like to know about mortgages, but I want to do somebody's mortgage and
right.
represent them in real estate.
I don't do real estate.
I'd prefer help more people,
Right.
right, than make more money on one person.
Yeah. The
So
bottom line
that's
is
just how
choose
I
your
run my
professionals.
business.
I'll say this in anybody for me. Choose the professionals. Milton, I've worked with him for years, and I'm not saying it's on the podcast, but him and his team are professionals. He's fantastic. He does a great job. Work with people like Milton, work with Milton because they get your best interest. And Milton's referral based. I'm referral based. That's what we do. We we expect a word of mouth, and that's how we build our relationships. And I think I can say this for Milton and for me. We don't treat you as a number. You are truly family. Every year, and I got to say this, we're going to Milton does this great
Yeah,
event, customer appreciation of the holidays, and he does it or somewhere around it. And you should see all of his clients all the years. And of course, I've had the privilege the past several years to have those clients as my clients, so I get to see them too. And
yeah.
that's how it is. And they're family and they come back to us and they refer us. And that's whoever you use in this industry, but hopefully it's Milton and his team. That's the kind of relationship and the person you want that really cares and will go after the deal. They will be
Right.
there after the deal.
I want you to be happy at the end of the day, because if you're happy, I'm happy, and we'll stay friends. Like
Yes.
I want to be a friend. I want to have a relationship long term. I never want to leave a transaction thinking, well, I'll never see that person again. You don't last in the business like that. Reputation is everything. I've been doing real estate now for 23 years. You've been doing mortgages for 38 years. That doesn't happen by accident.
No.
So
I laugh at people.
thanks.
I'm like, I don't want to have to be on the other aisle and have to run down the other aisle whenever I've done your deal.
Exactly.
Thank
Exactly. Yeah. Well, thank you
you,
so much,
Milton.
Kimber. I'm gonna make sure I get this posted up right away, and I look forward to speaking with you again.
Thanks, Milton. Have a good one.
Thanks, buddy.
Bye.
Take care.